Good morning, I am Adam Harris, and this is The Day Ahead.
Go ahead and click subscribe below to receive daily market analysis videos and important alerts. On the economic calendar for today, Bank of England's Carney speaks at 9:15 a.m, UK CPI data at 9:30 a.m, and then a leadership challenge following yesterday's Brexit vote at 7 p.m. In the currencies, despite a stronger US dollar and loss in votes, GBP holds, but the euro gets hit. In comms, gold keeps testing its resistance, and in the global indices and equities, the charts continue to climb steadily higher. You could jump to any chapter by clicking on the time link in the description below. Let's take a look at currencies first. This is the US dollar index. You can see that actually yesterday had quite a strong day, quite a strong move up. It's now actually still within the sell zone, and so not impossible for today to get a bearish down day. This would just be a healthy retracement, although we have clearly produced a high low, high high. We've actually changed trend. But if we do produce a bearish day today, then it would make sense for price to then subsequently resume the overall longer term downtrend. If we have a look at the euro against US dollar, we can see as a result of the Brexit vote yesterday, Theresa May losing in terms of the votes, we can see the reaction largely there where we had a weaker euro. Price is now back down below the 1.1450 level, back down within the range, failing to, although it attempted to find support, failing to find support and move out of that area. So again, back within the range, and we'll have to see ultimately how that then subsequently sort of how prices can deal with that. But interesting enough, looking at sterling, we could see prices still largely moving to the upside, and actually that reaction, although it ultimately had a bit of an in the run up to that, a strong move to the downside, bounced off that the previous level of support of 1.27. It is actually now back up above that. So interesting to see how that might ultimately then react. So largely the reaction could also potentially be as a result just of a stronger US dollar, but cable managed to survive that. Now we've also got the yen pairs, euro yen continuing to slowly edge down, very very slowly, not as clear about what I wanted to do. CAD yen as well, still stuck within that range, and Swiss yen actually pretty much going according to plan. Price here clearly starting to edge lower, so that's quite nice. Lower high, low low. Yesterday attempting to climb and ultimately ending lower, so JPY charts there still going pretty much according to plan. With the commodities, looking at gold, it's still very much on that weekly time frame, just stuck within a small candle just below that level of resistance, close to 1300, and attempting to push on higher without doing a proper retracement. So no real tradable opportunities on the lower time frames because we're quite close to resistance there, and very much overdue for a retracement. So just observing that from a distance. Silver very similar as well, still hasn't broken the low of last week's bearish candle, which would support the idea of it encountering resistance and then heading low, which would be healthy for it to do anyway. Palladium, similar behavior, also overdue. What I'd really like to do is to see it come back down into the moving averages or test this level of resistance at 1200 for support. So waiting on it to do that, and it's basically just sort of treading water at the moment. Then looking at a US Brent oil fund as well as ETF's crude oil, waiting on that weekly chart. Again, that's not doing very much either, waiting for a bearish candle here. If we ultimately get a bullish candle breaking above resistance and breaking the previous high, then of course this will change this trend, and the longer term monthly trend will start to look more bullish. So you could just see with crude oil, it's back in that sell zone. It's a really good area to produce a weekly bearish candle and to resume the downtrend. Of course, if it breaks the previous high, that will then change the game. So we will just have had a correction and then started to set up a monthly bullish candle. So just going to keep an eye on it from that perspective, especially as that reaction was off a level of support. And copper. Copper for today. So yesterday I was looking for copper to break to the downside. It's actually starting to look more and more bullish. Unable, though it was quite bearish here, it ultimately never broke out below that level, and it now looks as though it might ultimately come up and break this previous high, but I'll keep an eye on it. If I get a strong rejection here, ultimately it'll break lower, then that's fine, but it is now looking as though it's quite keen on changing its trend. So at the start of the week, I spoke about how the indices, global indices, were at a fork in the road, effectively, where their weekly could produce a bearish candle and then start to resume a longer-term downtrend, or potentially start to push higher and continue to build on that monthly bullish outlook. And it seems so far that they are continuing to break through levels of resistance and head a lot higher. That's Wall Street. Looking at S&P 500 as well, continuing to push its levels of resistance. It has to close above that as opposed to close below it and form a rejection. US Tech 100, NASDAQ forming quite a strong bullish candle there in the buy zone as well. So this setting up for a very strong January, and then potentially then following through in February and starting to hit a lot higher. It's the UK 100 still sitting at its level of resistance, still technically within that sell zone. But even the Germany 30 as well as Hong Kong and Australia also continuing to look bullish. So this is Germany 30 back within that sell zone. If it breaks above that 11,000 level, that will start to support a much more bullish outturn. So it's not just the US ones that are actually looking that way. Hong Kong one continues to push through its resistance. It's actually not broken through that. Again, I'd like to see it close above that, or even better would be to break that previous high. Australia 200 itself also, the reason I keep showing this one is that is an incredibly bullish candle as well, off the previous historical levels as well. That's a very strong bullish candle and a swing low. So all of this really supporting the idea of a bit more of a bullish medium to longer term outlook as well. If nothing else, at least going to be an attempt, if we close this way, to see an attempt in February to climb higher. Lastly, with those equities in focus, looking at Google, Alphabet, strong bullish monthly candle of a level support. This one following through Apple, likely to be the lagger in this group. Actually, still, this is now a weekly time frame. Still very, very far below. Still has to work its way through resistance. So falling behind. So likely to sprint to catch up with the rest. If I go through the rest of these, literally every single one on the list is strong and bullish. This is Amazon forming a very strong bullish candle here, likely to form a base in January and then climb higher in February. Microsoft as well as Boston Scientific. These ones very similar to each other, also strong bullish candles in the buy zone. All of this supporting the idea of a good correction and a healthy turnaround at this point in time. Moving on to say some of the more bearish ones on the list, looking at these on either a monthly or a weekly time frame to give a sense of that picture. Here we've got Barclays at its local level of resistance. My expectation is to see this actually close above it for the month. Standard Chartered as well, looking at that behavior off a level of historical support and resistance. Price here attempting to produce a swing low, potential for a swing low, and then climb higher. So all of that actually looking as though it's forming a basis for a climb a lot higher throughout February and March. So Q1 potentially going to be a bullish candle itself. Long overextended on the monthly time frame to the downside there. Lloyd's producing a bullish candle and then a swing low would indicate that price is likely to climb as high as 62 or 63. If that follows through with a bit of stability, and then we've got BP as well off that previous level of resistance, finding itself producing a bullish candle in the buy zone. So all of this really ultimately looking way more bullish than bearish, and supporting the idea across the board from both my historically kind of stronger equities and my historically weaker equities, looking pretty bullish across the board. This has been quite interesting despite some of the dismal outlook in terms of media news. We are seeing that the markets look as though they're preparing to do a rally for February and March. And so anyway, on that note, ladies and gents, I want to wish you a great day, and if it's trending, I'll be there. Just a reminder to hit the subscribe button. If you want to stay abreast of what's happening in the market, I'll be producing and bringing you the latest in the markets every morning in a freshly produced video.